Good afternoon, everyone. I hope all of you guys are doing well and the assessment preparations are going great. So, if you guys are able to see the screen and you are able to hear me clearly, please send a message or thumbs up, anything of that sort. Okay, great. So now we will be looking at test 4 of 2023, right? But not the whole paper, just part 3, as well as I'm going to go through certain things that I think will come out in your test. So our main focus, right? I want us to start there. We'll go upwards. So our main focus, we are going to start with part 3. The upgrade to pedal tennis court, right? So now we are required to formulate substantive procedures to be performed on the transactions relating to the upgrading of 5 pedal tennis courts and related qualifying costs during July 2023. We can exclude procedures to address dismantling costs incurred, right? So if I can look at this and critically think of it, or just to reference it to a certain topic, right? Obviously, yeah, I can see that we are dealing with the investment cycle, right? As we are dealing with the investment cycle, we first need to understand the core assertions that are with relation to assertions, right? So, first of all, we know that they are assertions for classes of transactions, right? So they are assertions for classes of transactions. So they are assertions for classes of transactions. So now, within these classes of transactions, there is occurrence, and you would find completeness, you would find accuracy, you would find cut off, you would find classification, you would find presentation, right? So this is not with reference to the investment cycle only. This is with reference to all the classes of transactions that you can get, whether you are dealing with the finance cycle, the revenue cycle, the payment cycle, inventory cycle, etc. Right? So it is applicable to all. So mainly what you need to understand with the occurrence cycle is that basically you have to prove that all recorded transactions are supported by source documents. So now, that's very basic. What you just have to do is that a transaction, you just have to support it to a source document. Meaning, if there is a purchase, let me rather make it simple. If you are making a sale, there has to be an invoice. So that transaction, it has to be referenced to the invoice. The invoice is a source document, right? So with the completeness one, you just have to check whether all transactions have been recorded, right? So normally, if you were to take your bank statement, right, or your sales journal, you would find that all those sales transactions, you as the auditor, you need to make sure whether all those transactions have been recorded. All your sales invoices have been recorded, essentially, in simple terms, right? Then when we move on to the accuracy assertion, basically accuracy, we are checking whether calculations are correct or accurate, right? Same thing. With the cutoff, which is the easiest one, you just need to check whether transactions are in the correct period. Then, with the classification, you need to check whether the transactions recorded are in proper account, right? With classification. So, transactions here, they have to be in what? In proper account. Then, with the presentation, you need to check whether the transactions are appropriately and aggregated, right? In the correct financial reporting framework, maybe in terms of IFRS 3, IS 16, IS 8, etc., right? So they need to be with reference to the applicable financial reporting framework, right? So this is when you are dealing with transactions. But should you be dealing with account balances, right? If you were to deal with account balances, the assertions that you would have if the question does not limit you to a certain assertion, right? It would be existence, you would have right, you would have classification, you would have completeness. Some of them are interchanged, right? And then you would have accuracy, valuation, and allocation, right? They go hand in hand with each other, right? Then you would have presentation. So what you would essentially do is that with your existence, right, you want to check whether whatever that you're dealing with, it exists. So basically, you're checking with whatever you're dealing with, it exists. Here, you want to check if whether you have the right to that particular maybe asset that you're dealing with. If you have purchased inventory, you need to check whether have you obtained the right of ownership towards that inventory. So with classification, it is the proper account, right? It needs to be recorded in the proper account. Then with completeness, you need to check whether all transactions have been, or all assets or liabilities have been recorded, right? Then, with the accuracy, valuation, and allocation, right? You basically need to check whether everything is at the appropriate amount. So basically, that's what you need to check, right? And then with presentation, it needs to be in accordance with IFRS in basic terms. It needs to be with the applicability of the applicable financial reporting framework. So those are your basics in dealing with assertions, right? But now, with reference to this question, we are dealing with assets, investment cycle. We need to check whether the upgrading of the 5-pedal tennis court and its qualifying costs were done correctly, right? Or everything is faithfully represented. So now, we are not limited to any assertion, right? So you would get a communication mark for listing everything in its applicable assertion. But Sometimes it can be difficult for students to differentiate which substantive procedure goes into which assessment. So this, you can get high marks without listing every substantive procedure according to its assessment. So in terms of this, before I can continue, we could read the scenario that is applicable to part 3, right? It says, okay, before we can read that, let's get the background information of this company. So it says your firm has been appointed as the external auditor of pedal activities. The company primarily specializes in the hiring of pedal tennis courts and the related hiring of equipment to customers. Head office and pedal tennis courts are both situated in the upmarket suburb of Sandton. The company's year end is 31st July. You are a member of the audit team. So you are a member of the audit team performing the audit for the 2023 year end. So what's important for me is that the year end is 31st July 2023. So that's very important for me. This is the most important thing that I can derive from this background information, right? So when I go to the part 3, it says during June 2023, which is within the 2023 financial year, the board resolved to upgrade the current pedal tennis courts to a newer panoramic series tennis. A contract was signed and order 10034 was placed on 15 June 2023 with a new supplier in China. So every time you see a transaction relates to a supplier that is outside the Republic, you essentially know that there's going to be a substantive procedure that deals with what? With foreign exchange amount, right? You have to, let me read the chat box. Am I breaking up?
No, you're not.
Okay. I think maybe it might be on your side, Fundo. So, as I was saying, every time you see something that pertains to a country that's not within the Republic of South Africa, there's going to be foreign exchange implications. So, your common and your general substantive procedure, which we will deal with a bit later after we are done reading the full scenario, is that you would need to confirm this foreign exchange amount. So you can make a side note for yourself as you are reading the scenario, right? So the flight on board date was the 30th of June 2023. So basically, this is the date the risk and rewards of ownership transferred to the purchase. And this can be directly attributable to the right accession, right? So now, Pedal was issued with invoice number RSA 230556 on the 1st of July 2023. The goods were received at the Durban Harbour on 15 July 2023. The goods were personally collected by the warehouse manager on the 16th of July 2023 and received at the warehouse of Pedal on the same day. Dismantling of the old pedal tennis court and installation of the new Panomeric series tennis court occurred, and the new courts were available for use on the 31st of July 2023. So this would be basically the date that you can start depreciating this new cost if you actually get it from an accounting perspective, right? Payment for the invoice RSA 23056 was made on the 20th of August. So the fact that you made payment post we have acquired this new tennis court does not impact that this tennis court has to be recognized in our financial statement on the 31st of July 2023, right? So now, payment for the invoice A2305, as I've mentioned that it was made on the 20th of August 2023. Separately identifiable components have been assigned unique fixed asset numbers. So separately identifiable components, they should be capitalized to the PPE because of they are identifiable and they are capable of being separate. So pedal account for Pendleton is caught as follows, right? So they recognize everything in terms of IS 16 with a useful life of 5 years at costless depreciation and accumulated impairment. So now this would be very relevant for us if you were dealing with the accuracy assertion, right? So anything that can impact the accuracy would be very helpful to us because of now. This would be very useful when we were to recalculate the carrying amount. Because of remember, when you're doing substantive procedures, you have to look at it from an accounting perspective. Remember, you as the auditor, you're auditing what the accountant has done. So basically, you as the auditor, you are there to check what can be wrong that was done by the accountant. So when we perform substantive procedures, we want to make sure that whatever that could be possibly done wrong in accounting, we as the auditors, we try to solve it so that it cannot mislead the users of financial statements. And if the management does not agree with us, it's going to affect our audit opinion. You will see that when we move on to the next question, when we are dealing with the completion stage of the audit, right? Because of now, remember, you are at the completion stage. You have been doing everything. You have done test of controls, you have assessed the risk, you have done pre-engagement activities. Now you are at the point where you have to formulate an audit opinion, but that's with reference to the next question that you are going to do. But for now, we're still performing the substantive procedures, right? So we have been given an invoice of the component ordered. Every time I see a quantity and a price and a total, I know I have to recalculate. Every time you see this, these are easy marks. You have to recalculate, right? And every time you see a total, you have to cast it, meaning that it is essentially you are reperforming the recalculation of the totals. So those are easy substantive procedures that you can do. And every time you see a discount, there are possibilities of certain cases where you would recalculate whether the discount has been calculated correctly. And you have been given a foreign amount. You want to do what? You want to check if whether that foreign amount has been translated correctly to the local amount, which is the rent amount, right? So during the discussions with the accountant, you became aware that management have instructed the accountant to capitalize the invoice in the 2024 accounting record. So this is a very big problem. You as the auditor, you became aware that management instructed the accountant to capitalize the invoice in the 2024 accounting record. But when I look at this invoice, right? When I look at this invoice, as much as this date is the 1st of July 2023, we are told that we have obtained the right on the 30th of June, right? So this is still within um, our current financial year, 2023 financial year. So, and the date of this invoice is still within the 2023 financial year. As our year end, as I've mentioned previously, it was the 31st of July 2023. So essentially, what does this mean? It means that this management is committing fraudulent activities because of how can we record an invoice that's pertaining to the 2023 accounting records in the 2024 year. This is a very a huge concern that we will have to analyze, right? But it's fine. Let's continue reading the scenario, right? So no exceptions to this request will be entertained. So management is essentially saying that should the accountant say we can't do this, management will not entertain that thought because of they have clearly stated that, right? And we have been given that an amount of 3,670,500 using the spot rate of 2.61 and the related qualifying costs were capitalized. So we will need to check whether all these costs that were capitalized, do they meet the recognition criteria of PPE IS 16. So you have done PPE in accounting, I think, around about in May, I think, somewhere there. So now we are given a final materiality of 3 million. So anything that is above the materiality amount, it is material, and therefore it will be important when we are going to do our conclusion, right? Okay, so the following Chinese young sports rates are available. So this, we would compare it to a reputable financial institution where we want to check whether these rates are reliable, right? Okay, so now we have read the scenario. We can start going through the things that I think you have to know before we can dive into the question fully, right? So I'm just going to give you a broad summary of this investment cycle that is with relation to PPE, right? Because of remember, in your investment cycle, you can get substantive procedures that are with relation to intangible assets. You can get substantive procedures that are in relation to shares. You can get substantive procedures that are in relation to PPE, right? So now, basically, with the risks, as I have stated, let's go back to our rights. So basically, with the right, the substantive procedures that you want to check, right, is that whether the assets you had owned them. So basically, how would you do that? So let me just write it for you. With the right, you want to check whether if you own the assets, and how would you do that? Obviously, you would need to do what? You need to inspect maybe the director's minutes. There is a one that you can use, which is to inquire from management whether you own them. But I will not rely on that as the audit because of a person can lie. I can inquire from management and they can say, yes, we own those things. But it is not reliable for me to formulate an audit report based on inquiry. Sometimes you have to inquire because of there's nothing that you can do, but it is not the mostly reliable substantive procedure that you can use it in practice. So now, after you have checked whether you own this rights through the director's minute, from that, you can do what also? You can inspect, for example, let me write it here. You can inspect the purchase document, right? So obviously, let's say you have purchased inventory. There is an invoice that's been provided to you that you obtain the right and ownership to this inventory the moment it leaves the factory or the moment it is arrived at your place. So you need to check because of something that's in transit to you and you do not own it as yet should not be in your books. But if it is in transit and it is not with you, but you own it, it should be within your books. So I would go to the purchase document to check. And as I'm going to those purchase documents, I want to check whether this purchase document is in the name of the entity, right? So if, for example, if I was dealing with vehicles, just an example, if I was dealing with vehicles, what would I want to check? I would want to check the title deed because of this one is going to give me a clear indication whether I own the asset or not, right? So if it is for lease, you would obviously inspect what? If it is for lease, sorry, if it is for lease, you would obviously inspect the lease agreement to check whether this particular company has the right to those particular assets, right? So with existence, what you would need to do, which is the most reliable one with existence, if you want to check whether something exists, If you want to check whether something exists, you would obviously perform a physical identification. If they are telling you that there are 50 trucks, you can go and physically inspect whether they are 50 trucks. Because if you are checking whether they are of existence, right? That's why normally you'd find a company performing stock count, or the auditors performing stock count, because if they want to check whether the inventory that's been presented in their financial statement, does it exist or not, right? So now, if you want to check whether vehicles exist and maybe they are in transit, maybe it's a logistics company, because of it would be impossible to physically inspect whether those vehicles are there. I would inspect the insurance documents, because of those insurance documents, they are going to give me a clear indication whether these assets exist or not, right? Because of a company cannot pay insurance for something they do not have, right? So let's move on to the completeness. Let me just read the chat box. Oh, am I being too fast? Okay, I apologize for that. I apologize. Any questions before I can continue? Okay, I assume there are no questions. So we can start looking at the completeness now. So with regards to the completeness, uh, we are checking whether the risk is that basically assets not being recorded, right? So, or assets being capitalized instead of expensed, or the other way around. So normally, sometimes you might find out that something is with regard to a repair, right? And sometimes it's with regards to an upgrade. And sometimes that repair, you should not capitalize it. Sometimes you should, if it is separately identifiable, right? So you might find out that items which are separately identifiable were not capitalized to that PPE account. So you want to check whether those things have been capitalized or not, right? So yeah, I'm just giving you guys a broad overview, right? Nothing hectic. So basically, yeah, you are just checking whether everything has been done correctly, right? I mean, all assets have been recorded, essentially. And then with the accuracy valuation and allocation, um, the indicators is that if you see VAT, if you're dealing with vehicles, you should know that VAT should be included, right? Or if you're dealing with revenue, you should know that VAT should be excluded from revenue. So now, what you would essentially do with the accuracy and valuation, right? You want to check maybe everything has been done accurately, everything has been calculated accurately. So if they are foreign transactions, you want to check whether um, the foreign currency has been converted correctly. So this is what you want to do. Then, if there is anything that pertains to depreciation, what is the risk of depreciation? What can the accountants do wrong? So basically, you want to check if the accountants have calculated depreciation correctly. So that is what you would want to do with depreciation, right? What could impact that the residual value might not be taken into account. Useful life might be incorrectly assessed. Depreciation method might not be applicable. So with the impairment, you know that it might not be at the lower of the recoverable amount or the carrying amount, or the recoverable amount may not be at the higher of the value in use or the fair value less cost to sell, right? So you have to think of accounting before you can start thinking of auditing. Think what you as the audit accountant can do wrong. Then you as the auditor need to check whether it has been done incorrectly or not. So that is the main reason why you would perform substantive procedures. But besides that, with substantive procedures, there are always general substantive procedures, right? Such as obtaining a signed management representation letter with reference to the specific scenario that you'd be dealing with, right? And if you're given balances, you would always agree the opening balances to the prior year, and there will always be recalculations of totals. There will always be reconciliation to the asset register, to the asset balance in the general ledger. And then you would also agree the closing balance of the fixed asset register to the general ledger, to the trial balance, and to the annual financial statements. So those are the general um, substantive procedures that at most should always be in your answer, right? So now what I want us to do, right? Or if, okay, I can also state the accuracy assertion, right? We could do this for all the assertions. But the logic thing is we have to think what was done wrong by accountants, right? So every time there's a purchase, right? Every time there's a purchase, you have to think whether it has been approved by the directors or the management, right? So the board resolved to upgrade the current pedal tennis court. So what does this tell us? So if you were to answer this question with reference to the substantive procedures, so the board resolved, the fact that the board resolved, what you would do, you would inspect, you would inspect the minutes of the board, you would inspect the minutes of the board for the approval to upgrade the current pedal tennis court, right? So you would do that. So you can do substantive procedures as you are reading the scenario, right? So they are telling us that a contract was signed, right? And order 10034 was placed on 15 June 2023 with the new supply. So what would you do? You would inspect the contract. They're telling us that the contract was signed. You would inspect the contract. So why would you essentially inspect the contract? You would want to ensure that the contract is in the name of what's this name? It is in the name of the contract. You would inspect the contract for the following: that it is in the name of pedal, right? And the fact that they are telling us that it was signed, you would also you would inspect the contract for the following: that it was signed by pedal, right? So every time you read the scenario, you come up with something that could have been done wrong or that could have been done for fraud, right? So order 10034 was placed on the 15th of June, right? So what you can also check for, um, but this would be in specific reference to the right? So you can also add that the date is, you could inspect the contract that the date is the 15th of June, 2023. Then we can move on to the other one, right? So the flight on board date was the 30th of June, right? That you can also state as part of the date. If you are not stating this one, you could state that the flight on board date is the 30th of June 2023, right? And this represents the date the risk and rewards transfer to the purchaser. So Pedal was also issued with an invoice number RSA 23056 on the 1st of July 2023. One thing that you have to check before you can do anything with the invoice, you need to check whether that invoice is for something's, I mean, for certain things, or it is for what you have ordered. Because of now, you can't order pens and then they bring you highlighters. Because of now, that's not what you ordered. You always have to do what? You have to compare, right? You have to compare the invoice to the purchase order, right? So you can compare the invoice to the purchase order. To agree that it was for items ordered, right? So you can do that, right? So what also can you do? They are telling us that the goods were received at the Durban Harbour on the 15th of July. So what you can do with this very same sentence, you can write it again as point number 5. But now what you want to do, right, is that now you would want to compare the invoice to the what? To the delivery note. Delivery note or documentation. Right. The same thing, you can do it twice. And then you will obviously obtain your other marks, right? So let's go to point number 6. Let me read the chat box. Sorry, so if it's shares, how do I go about it? If it's shares, how would you go about it? Can you please unmute and ask me a question, because can you please provide more clarity on your question? Sitle, can you kindly unmute? Okay, so now let me move on to the other one, right? So what I can do with this delivery note that I am provided with, right? So what I would want to check is the date of the delivery, right? So basically, I want to check as the audit, I want to check whether they have received these goods at this particular date, right? So what I would want to do is that I would want to inspect the delivery note that it was received on the 15th of July, 2023, as well as the receipt of the goods or the receiver of the goods or the acknowledgement of the goods. Because of now, if um the goods were received, I need to make sure that the goods were received by us, right? So the goods were personally collected by the warehouse manager on the 16th of July 2023 and received at the warehouse of Paddle on the same date, right? Okay. Dismantling of the old Paddle tennis court and installation of the new Panomeric series tennis court occurred. The new tennis courts were available for use on the 31st of July 2023. So now I want to make sure that the installation of this tennis court, what do I want to check? Remember, installation is often associated with what? With costs, right? Cost of installation. So I want to check whether all qualifying costs were capitalized, right, to PPE. So that's one thing I would want to do um, with this installation cost, right? So obviously now I do not have the schedule of the cost, right? So what would I want to do? These are my general procedures, the ones that I'm going to state now. This is where you can always get free marks. If you are not provided with a schedule, what do you have to do as the audit? You have to do it. You have to obtain it from management. You have to obtain the schedule from management, right? You have to obtain the schedule from management. You're asking that I should repeat question number 6, right? So I would want to inspect the delivery note that it was received on the 15th of July. Basically, I want to check the date, right? Because of this is very important because of now, if the delivery note is for the 15th of July, if, for example, you have a creditor, it is going to be very necessary for you because of now. If the person has not delivered the goods, essentially that creditor would not, you will not be liable to pay that credit, right? So this is why we want to inspect the delivery note for the date and as well as for the acknowledgement of the goods, right? So as I was saying that if we are not provided the schedule of the calculation, we would obtain the schedule from management. And obviously the easy one is to reperform the calculation of the schedule. And you can also add, you could also scrutinize the schedule for any unusual entries, right? You could scrutinize the schedule for any unusual entries. Because of now, you might find out that management included things within the schedule that are not part of um, the tennis court, right? So you would scrutinize the schedule for any unusual entries, and you would follow up with management for any unusual entries identified. Right. And then what will you do with the schedule now? You would agree the schedule to the cost, right? Or we can make it simple that we can agree the schedule to the invoice, right? We can agree to the purchase order, whichever one that you would prefer, you can do that, right? So with substantive procedures, these things are very simple to do, right? They are very simple to do. So with reference to the second statement where it says payment for the invoice was made on the 20th of August 2023. This I'm not particularly really interested in because of now. It was made in the next financial year. So why would I want to perform substantive procedures for something that is being made in the next financial year, right? So I'm going to limit my substantive procedures to only one. Only one. Do not discuss a lot about something that occurred in the future years. As much as you're discussing the occurrence and completeness, or if you want to discuss the cutoff, do not invest a lot of points in it, right? Do not invest a lot of points in discussing this payment for the next financial year. If you have a lot of things to write about a future payment, limit it to 3 points, right? But if you don't have a lot, just stick to one. So what would you do with this payment? You would inspect the bank statement on August 2023. On 20 August 2023 to confirm that invoice RSA 23056 payment was made, right? So this is what you would do. And the way they are making substantive procedures, it is very great because of like you get 1.5 for every point that you've stated. So essentially, yeah, essentially it is 25 marks, right? For you to basically do well in this paper, you would need 25 divided by 1/5, right? So essentially, how many points would you need to do well in this paper? You would need 17 points, right? So you would need 17 points. You do not need to write 25 points. And we are already on 11 just by applying easy ones. We haven't yet thought of the difficult ones, right? As yet. So we haven't thought of the difficult ones as yet. So I do not want us to focus on getting this 2 marks of the assumptions because of it's going to confuse you and it's going to take time for you to structure your answers accordingly, right? So you have to focus on getting the maximum that you can within this 25. You can let these 2 marks fall away. You can let the 2 marks fall away, right? So let's go back to the scenario. So it says separately identifiable components have been assigned unique fixed asset numbers. So what do you want to check? You want to check whether these separately identifiable components have been indeed assigned the correct um, fixed asset numbers, right? So You could state that as a substantive procedure. You would inspect the fixed asset register. You would inspect the fixed asset register for fixed asset numbers to ensure they agree to the asset numbers on the invoice. Right. Then point number 13, if you still want to state more on this separately identifiable component, right? You would want to inspect the fixed asset register, whether the separately identifiable components have been capitalized, right? So that's what you can do with the separately identifiable component, right? So pedal account for tennis court as follows, right? So the moment we start seeing this depreciation, we know that now we are dealing with the accuracy and valuation, but you don't need to state it, right? You don't need to state it at all. Um, what you can do or what you can state, right, is you can say you can inspect the fixed asset register that no, not the fixed asset register. You would inspect the PPE note, right, or the schedule that the tennis courts are accounted for at the net depreciation amount, right? The only problem with this statement is only one. Yeah, it would be us reaching, right? Because of the only thing that makes this point that we are writing sometimes to not be marked, right? Is the fact that those were ready and available for use at year end. So meaning that we would not have accounted for depreciation as yet. So it will still be added cost, but at some questions that you do, it is included. So this is you just putting a gamble on it, but it does apply in other cases, right? But in this particular case, it is something that you just write when you don't have point you are reaching, but not always it will be marked, right? So, and then what you need to check is that since we are told that this invoice is net 5%, right? So we need to inspect the invoice and recalculate that the invoice amount, not the invoice amount, the and recalculate the amount paid, that it is net 5%, right? So basically, we'd inspect the bank statement because of, if I were to look at this, it says when did we make payment? We made payment on the 20th of August, right? So we would want to check if this payment was made net 5%, because of it would be a problem if it was made net 5%, right? Considering the fact that the invoice date is the 1st of July 2023 and payment was made on the 20th of August 2023. So if this is done, it is going to be a problem. Okay, is not net. So not would make it much better to avoid over explaining, right? Because of if we put this not there, we do not need to elaborate further. And since I've been given this ones, which is the easiest ones, I would essentially reperform the calculation, right, of the total for mathematical accuracy. You can state that. And you could also obtain the exchange rate for the spot rate. So the spot rate is the date of payment or the date of the transaction that we capitalize into the books. So we would obtain the exchange rate for the spot rate and compare it to the one from the reputable financial institution, right? To see if they agree. So this is what you would want to do, right, with this exchange rate. Because of now in your books, it can't be in Chinese yuan. It has to be in rands. So you need to check at the date that this transaction has been used, right? So you would want to do that. And you would also want to reperform the translation from the local amount to the, from the foreign amount to the local amount. So you'd recalculate the conversion from the foreign amount to the local amount, right? So that is the basic part of it, right? So we can write point for, like we can write the whole point and we can even write additional point. What you need to learn from this is that the scenario has to guide you. Do not come up with substantive procedures because of you have mainly seen them from a past question. Sometimes, yes, you can be marked right, but try to limit yourself to information that's on the particular scenario, right? So we could reperform. So this is point number 17, I think, and you only need 16 points. So the only reason why I'm adding number 17, it is because of the other one we were reaching, right? So I'm going to add point number 17, where we would have to recalculate where we have to recalculate the conversion to the local currency using the spot rate from the reputable financial service provider, right? At the transaction date. Then you'll obviously now you are done, right? Then you'll get your free mark of what? Of the common general substantive procedure, which is almost applicable to everything, right? Which is you will obtain and you can also inspect a signed management representation letter. So this is always a free mark. And then you always have to link it to the question, right? With regards to the upgrading, you have to link it to the question of 5 pedal tennis courts. And the related qualifying costs. Right. So that's what you would do. So now, I'd appreciate if we could move to 3.2. Any questions before we can move to 3.2? Okay. So now we are asked to discuss the impact of the recognition of pedal court in the 2024 asset register and accounting records on your audit opinion. So now we are looking at everything from the perspective of an audit opinion, right? But before we can answer, we need to understand an audit opinion, right? Remember that the overall objective of an auditor is to issue an audit report, right? Based on information obtained from the audit, right? And it must provide reasonable assurance and provide that the statements are free from misstatement or any material misstatement. And you know that material misstatements are the ones that would affect the judgment of the user. So materiality can be quantitatively or qualitatively, right? So what I mean by those is that misstatements can be qualitatively or quantitatively. So misstatements can be quantitatively or qualitatively. So as misstatements can be quantitatively or qualitatively. Yeah, quantity, it's amount. You look at misstatement from the amount perspective. Then with qualitatively, you look at misstatement from a non-financial perspective. Right. So you look at misstatement from a non-financial perspective. So now, what you would need to understand, right, when you are issuing an audit report, right, is that misstatements sometimes do not lead to a qualified audit opinion, right? So when you are expressing an audit opinion, you need to think of this, right? You need to think whether are there any material matters found. This is the first thing that you have to think of. Then if it is a no, so if it is a no, what you are going to do is that you are going to issue an unqualified report, which means misstatements are free from error. Then, if you found material matters, which is a yes, right? So the other question that you have is that, does this misstatement impact the audit opinion? So if they impact the audit opinion, right? If this is a yes, you would now have to consider a lot of things, right? But if it is a no, let me do it like this. I'm going to discuss what you have to consider. If it is a no, you can clearly on your audit report state an emphasis of meta paragraph. Right. So if it is a yes, you would now have to consider whether is it due to limitation of scope. So what do I mean by limitation of scope? Let me use a different color. So if it is a yes, you have to consider whether it provides a limitation of scope. So limitation of scope, it means maybe the management is not willing to provide you with everything, right? So it causes a limitation of scope. So they are not willing to provide you with all the invoices. So you do not know, there's uncertainty basically within your audit, right? So if there is uncertainty, right? If there is uncertainty, you have to branch it further. So if it is only material, you would issue a qualified report. Then if it is material and pervasive, right? If it is material and pervasive, you would issue a disclaimer. Right. Then if it is if it is not due to a limitation of a scope, right? Then normally you'd find out that it is due to a difference in opinion with management, right? So you and management are not agreeing. So if it is only material, or if it is material and pervasive, right? It would be what? If it is material, it would be qualified, right? But if it is material and pervasive, it would be an adverse opinion. So those are the only differences, right? But in most cases, you are going to deal with a qualified opinion. It is rare for you to deal with an adverse one or a disclaimer. So in most cases, you'd be dealing with a qualified opinion, right? So now the question says we have to discuss the impact of the recognition of pedal court in the 2024 fixed asset register. So basically, we are looking at this. So this is when management wants the accountant to capitalize it in the 2024 year, right? So now, what I can clearly see, right? Before we can discuss this further, right? Is that I'd love to mention the fact that we can use certain steps to guide us, right, in answering such a question. So normally I would have 7 steps, right? So we will answer everything according to this 7 steps. So step one, what you look at is that is there a misstatement? So you would look at step one, is there a misstatement? Then you would look at step two, type of misstatement. Step two is the type of misstatement. Then step three, you would state whether is the misstatement material. Then step four, you look at is this material pervasive? Then step five, you would look at the fact that what do you have come up with, which audit opinion do you arrive at? So now you'd come to the part of the audit opinion. Then step six, you'd look at if there are any other paragraphs to add, right? Then this is the key ones that you can think of, right? So the last step, which is not common, which normally would end here, and I do not want you to focus on this one. The step seven, right? Um, is there an irreportable irregularity, right? Or is this reportable irregularity? I don't want you to focus much on this because of this is normally asked as a separate question, the seventh step, right? So, so the first question we are going to ask ourselves, is there a misstatement, right? So basically we want to check if there's an error that is not adjusted, right? So basically what I can see is that um, this amount, it was not capitalized in the 2023 financial year, right? Um, the amount of 3,675,000 wasn't capitalized in the 2023 year of assessment or financial year. So what type of misstatement is this, right? So what type of misstatement is this? So this basically management is refusing to adjust the statement, right? So this is essentially a disagreement with management. As they do don't want to adjust the financial statements, right? So another question that we have is that, is this misstatement material or not? The step 3. So is the misstatement material or not? So the fact that this misstatement is above the materiality amount, right, is a huge problem. The fact that this amount was above the materiality amount is a very huge problem, right? So you can state the amount is above the final materiality of 3 million, right? So therefore it is material, right? Therefore it is quantitatively material as it relates to an amount. Therefore it is quantitatively material. Is it pervasive? No, it is not pervasive, because of now it does not relate to majority of the line items, right? So it does not relate to majority of the line items. Let me read the question in the chat box. In step 2, is it okay to say it is judgment type of material misstatement? This is not judgmental, because if you are not using any judgment, this is a factual misstatement. It's a good one to also add that it is a factual misstatement. You can add factual, because if you are not using any judgment, right? So it is not pervasive as it relates to specific line items. Then, with our audit opinion, right? So the fact that the audit opinion that you are going to issue is not free from any material misstatement, we can say that it is modified, right? So um, a modified opinion will be issued. So what type of a modified opinion will be issued? You could say a qualified opinion will be issued. Why? Because of now, it does not relate, it is not pervasive, it is only quantitatively material. So it is qualified, right? So what are the other paragraphs that you can add onto your financial statement? You could add the except for paragraph. You would issue a qualified opinion, but you would add the except for paragraph, because of the financial statements are fine, but the only problem is that this is the problem. So you would have to add the except for paragraph. And since it is a modified opinion, you would state the basis of your qualified opinion. To also state the basis of your qualified opinion. So will this video be made available to us after the bootcamp? Yes, it will be made for you guys. The basis for so this one, I don't want you to focus on this step. it is a general question that is asked separate, right? So, I see a hand raised up. Can you ask your question?
Hello, sir.
Good
I
afternoon, how
thought
are you? Yes.
I thought that you said the audit opinion is an unqualified, but I saw now that it's a qualified opinion. That's why I was raising my hand. I was going to ask because there was like an yeah. So yeah, never mind my question. I thought that you wrote unqualified.
Okay, no
Thanks.
problem. Nomfundo, can I take your question?
Hi, sir. Can you hear me?
I can. How are you?
I am good in yourself.
Great.
Okay, so mine is based on the pervasive part of the opinion. I'm still not understanding the that like the purpose of pervasive. Like I don't understand the I don't think I even understand the concepts. So it kind of confuses me and throws like my entire understanding of the audit opinions. So I don't know if you can explain it to me so that maybe I can understand
Okay.
how it works. And yeah, thank you.
So with regards to pervasiveness, right? So with regards to pervasiveness, so normally you would not find something pervasive when you're doing a question, right? It's in rare cases. So something can only be pervasive if it affects majority of the line items on the financial statement. So if we take a closer look to this scenario, we are only impacting what? We are only impacting the PPE, which is the fixed asset. And what are we impacting? The people that we owe, the creditors. So it is only with reference to two lines, right? So it is not pervasive. But if this misstatement affected the revenue, cost of sales, it affected the net profit, it affected the assets, it affected the liabilities, the non-current liabilities, the equity. So it is affecting a lot of things. So it would be pervasive, right? So when something is very specific to certain line items, it is not pervasiveness. Normally, your norm would be if it affects two accounts, it is not pervasive, right? So if it affects two, so if I were to elaborate further, right? So the word pervasive, it is used in the context of misstatement, right? To describe any uncertainty. So essentially what I'm trying to say is if it affects the annual financial statements as a whole, it would be pervasive, right? And also anything that is not material, it is not pervasive. So if the whole financial statements are impacted, so the whole annual financial statements are impacted, then it is pervasive. Does it make sense now?
Okay, yes, it actually does.
Okay.
So just to clarify if my understanding is correct, you are saying that if for example, let's say we have um one what do you call one misstatement, right? Let's say we have one misstatement that maybe the management is refusing to correct, and
Yes.
it so happens to have exceeded the materiality, right? Then it um then that can qualify as a pervasive um, misstatement, which would make our audit opinion be uh qualified if it's one. But if it's if it's more than one mistake, what happens?
If it is more than one mistake, it is still not pervasive. It should affect the whole annual financial statement, meaning that it should affect every line item essentially. In the most simplest term, every line item on your annual financial statement should be impacted. So remember, with your annual financial statement, remember that you have your statement of financial position, you have your statement of profit and loss, you'll also have your statement of changes in equity, etc. Right? So the statement of P&L, it must affect your revenue, must affect your cost of sales, it must affect your gross profit, must affect your operating income or other income, other expenses, must affect your income tax. With your statement of financial position, it must affect your non-current assets, must affect your current assets, must affect your equity, must affect your non-current liabilities, must affect your current liabilities. Then it is pervasive if it affects everything here. But yeah, it only affects which items? It only affects my non-current assets, and creditors would be current liabilities at most. So essentially, it affects only two line items, right?
Okay.
So it doesn't touch my current asset, doesn't touch my equity, doesn't touch my non-current liabilities. And even if it did touch my non-current liabilities, it still doesn't touch this. So it would not be pervasive.
Oh, okay. No, thank you so much. I get it. I think I get it. Thank you.
Any further questions? Okay. So those of you would love to know what to study and what not to study, right? You would focus on learning unit 11, learning unit 12. Is it learning unit 12 and learning unit 30? Let me just double check quickly. Let me just double check for you guys quickly. So, okay. So if you were to pay attention to certain topics that are going to appear, you would essentially focus on learning unit 12, which is Companies Act, right? And then you would also focus on learning unit 11, which is what we have done now, reporting, right? Reporting. So those are the things that you should focus on. You should be able to pass this test if you focus on this. You should be able to pass the test if you focus on these two learning units alone. Because of technically, they are going to count more than 70% of the paper to 80, let's say plus minus 75% of your paper on Monday. Going concern can be pervasive and material. It is subject to it's very subjective because of now. Sometimes they are mitigating factors. So sometimes they are mitigating factors that you have to take into account. So it is not a one solution fits all, right? So it would be very important to also analyze the situation first, right? Because of remember with going concern, right? you need to check whether are there any mitigating factors to try to take out that company out of its going concern issues, right? So if you have come up with the conclusion that this entity is not foreseeable to continue operating in future, you have to think of mitigating factors first before you can start thinking of the effect on the audit report. So it can also be material only and not pervasive, right? Because of now, if I were to think of going concern, right? Let me just do this for you guys. Or do I, okay, I think I have space here. So if I were to think of going concern, you need to check whether, are you sure that it is a going concern, right? So if you are definitely sure that this is a full going concern, or if there is uncertainty about this going concern, so you are not sure if the company might be able to come out due to this uncertainty, right? You'd obviously issue a report. If it is only material, it would be a qualified report. And if it is pervasive, then it would be an adverse. Then with regard to, no, it's actually the other way around. So if there is uncertainty, right? Let's start with there being certainty of the going concern. If it is material, it will be qualified report. Then if it is pervasive, it would be an adverse report. So if there is uncertainty about the going concern, right? And we first need to check whether can it be disclosed in financial statements. If it can be disclosed in financial statements accurately, right? Then you would issue a materiality uncertainty to going concern, right? So basically you'd issue an unqualified report if it can be disclosed. But now, if it cannot be disclosed accurately in the financial statements, you would now give a material, if it is material, you would give a qualified report. And then if it is pervasive also, you give an adverse report. So it is not a one solution fits all with regards to going concern. Nomfundo, can I take your question?
Okay. So I want to ask how we can answer a certain question that I came across when I was doing the previous papers. They asked us to discuss the impact on audit opinions if management was refusing to make the changes that maybe the auditor was proposing they make.
So if they are
So
not
how do we
willing
go
to
about
make changes,
answering?
if they are not willing to make
Yeah,
changes, it is a disagreement between
yes,
you and management. So it is a factual
yes.
misstatement. So a similar way that we have discussed this audit opinion would be the same way. Because if it is a factual misstatement due to disagreement between you as the auditor and management. So
Mm-hmm.
everything that we have done in this question should be applicable there.
Thank you.
Except maybe the amount also you have to think whether it's material or not, right? The amount also have to be a fact, whether it can be quantitatively material or not, and whether it can also be qualitatively material or not. If it is as a result of a non-compliance, it would be qualitatively material too. because of that would influence the decision of the users of financial statements qualitatively so. Okay. So this brings us to the end of the auditing bootcamp. All the best on your upcoming test. Thank you.
Thank you, sir.
Bye.
Thank you. Thank you.
Thanks for the